I'm gonna show you a level that gets hit every single Monday. Using this knowledge, you'll be able to make money taking trades towards this target or from this target. It is very simple. It works on all USD pairs and indices. I will go through multiple examples and multiple scenarios. There's some rules that I'm gonna be mentioning while going through those examples, like what happens if there's news, what happens if it didn't hit it on Monday, what can we expect. So follow along, let's get into it. As I mentioned, this could be used on any USD pair and on indices as well. And by the end of the video, I'm gonna share the indicators that I used to backtest this in order for you to go and do the same. So the first thing is those slides, I explained them in my previous videos. If you haven't watched any of my previous videos, go ahead and do that because those are very important. For now, I'm gonna explain what we will be focusing on, which is this red line. This red line right here is London close, which is 11 New York time. London close is on Friday, is the weekly close, and this is important for us. Why? If we put a ray here, a line on the Friday close right here, watch what happens on Monday. This line is respected, okay? And this is one example. We're gonna be going through so many examples so you can watch what happens if we didn't hit it on Monday, how the market goes from expansion just to come back and retest this level. It's a very important level. We can take the trades from it and we can target, as I mentioned. This is one example. Let's just keep going and you're gonna see how valuable knowing this information, how it would help us. This is Friday and we have London close right here. Watch how on Monday the price respects it, okay? This right here is a London kill zone. Actually, it's the whole London session. It's from 8 till 4:45. This is another one and we can see how it's respected. I can go over and over again and show you how it's being respected every single Monday. Look at this. So this is the open right here, New York, and this is London, and we go up to retest this line. So here, for example, any sign, any liquidity grab, any break of structure, we can take the trade from it, targeting this area. Right here is a breakaway gap. I'm sure many people don't understand this quite well, so if you want me to make a video about that, I would do it. It's very important. Breakaway gap is the gap that is always left open. It could stay open. Fair value gap that could stay open. This is what a breakaway gap is. Let's keep going. This is Friday. As we can see, the price comes back to it on Monday. This is the regular days. This is what happens on a regular Monday. What happens if we didn't retest it on Monday is what I want to show you guys, okay? This one, as you can see, it's always being respected. Look at this. This is my Friday being respected. The price is always coming back to retest it. This is New York, this is London, and this price is always being respected. Now, for example, we have this Friday right here, and the price on Monday did not come back to retest this area. As you can see, Monday was a holiday because we closed at 12:45. Tuesday didn't come back and retest it. Wednesday didn't, but we leave this area right here because it has not been retested, and we expect the price when it turns bullish to come back and retest this area. Now we have extended it. Let us see what happens now. Will the price go back to retest this area or will it not? So as we can see here, there's a change of trend. Okay, now we are bullish. Is it gonna go higher to our area or not? This is our line that we extended, and look how we can see another PD array, which is an order block, happen at the same exact place as our line that we extended. This is one example of what could happen if it didn't retest it on Friday or on Monday. So let's keep going. There's also more to it. It's not just about that. This is also Thursday, and if we extend it, we can see that the price respects it fully, but this is a topic for another video. We're gonna focus on this one right now. Another one, this is Friday right here, okay, and this is on Monday. The price respects it fully. Okay, this is another example, which is not the normal. This is Friday London close. We expand higher on Friday. Monday, what was it? Also, it was a half day, it wasn't a full day, so the price doesn't do anything. And right here we can see that on Tuesday, when the market opened, we came back and exactly retested this area. But I just want to show you, if we know that the price needs to come back to retest this area, how could we use this to our advantage? This is a failure swing right here. As you can see, what did we do? We broke structure right here. Okay, so now we flipped bearish. Right now, since we are bearish, we know that our target is this area right here. So now we can go into our lower time frames. Okay, since we broke structure right here, we can go to the 5 minutes. This is our break right here, and now we have our dealing range, which hits our OTE to the pip. We can take it from the start of our OTE to the, we can put our stop loss above and target our target right here. Okay, and just wait and let it play out and see how it's gonna go. Since we know that the price is high, it has a high probability to target this area every single time, then we are confident our trade, we can take it. We just wait for some signs from the market that allow us to take the trade. I'm gonna go through a couple more examples and then we're gonna go to the last part of this video. Okay, one more time. This is Friday right here, and look how the price respects it perfectly. And I want to show you also that the price respects it not just on Monday. It's a level that is being respected for a long time, especially if it has not been hit. And one more thing to look for is, like, look on Thursday how the price came back exactly to retest this Thursday close. But this Thursday close, as I mentioned, is for another video. All right, on this last example, this is Friday and we have our line right here, and this is Monday open. We didn't actually retest it, probably because we have news on Tuesday, which is could result in not retesting it on Monday. And as you can see, since we didn't retest it on Monday, then this could happen on another day. Looking at this is a very beautiful trade, understanding that our target is lower with a high probability. Right here the price goes higher and it reaches a point where it makes a failure swing right here. As we can see, it goes higher and then we have a failure swing and then we go lower, and this right here is our break of structure. So this is our first sign. Now we come back and we retest this area. We didn't go to the fair value gap right here. Okay, we just retested this order block right here. Now what we can expect, so this is our long-term high, because there's liquidity above that we taken, external liquidity. Now we're focusing on internal liquidity, which is the order block, the fair value gap. And the price comes here, makes a swing high. This is a short-term high. This is now becomes an intermediate term high. So what do we expect? For intermediate term high, we expect a short-term high next to it. I'm gonna take you through small brief example of this model, which is the market maker model. If you're interested, I can make a video about it. This is a very important topic. This is our short-term high. So basically, if we couldn't enter, for example, on this area, which is when we draw our dealing range from here to here, this is our discount, this is our premium. So if you want to take a trade, we're gonna take it from here, okay, like this, targeting our area right here. But if we missed this entry, for example, or we want to add an entry to our entry, this is our short-term low, short-term high, and intermediate term high. So we expect another short-term high in order to have this as intermediate term high. I'm going to try to keep it very simple. Every intermediate term high needs a short-term high to the left of it and a short-term high to the right of it. Since we have our short-term high to the left of it, now we are expecting the one to the right of it. For example, this is our short-term high right here, which we can have our trade from this short-term high right here, and we can have our stop loss above this area, targeting also the same target. Another example, if you find this complicated, then we can actually put our fib from here to here, and we can again buy from the premium area, and we will put our stop loss above the intermediate term high because we do not expect this to be taken out. So this is 3 types of entries that you could use in order to benefit from the move that we are expecting, the high probability move. This is the last example I'm gonna be going through, but if we just look here, I want to show you what happens on Thursday again. There's a lot of more content that I would like to give you guys, the market maker model, what happens on Thursdays, power of 3. Just let me know in the comments what you would like me to cover, so I can do it on the next video. And now, reaching the end of the video, I'm gonna show you the indicators that I used, which is, this is the sessions. I just used New York from 8 till 5. This is the gray line right here. I also used the previous days, I didn't use it, days of the week. Okay, for just to Friday, Monday, Tuesday, nothing special. And my indicator right here, and I only used those settings in this video. This is my indicator for the lines that are shown right here. You can go ahead and copy them. I hope you guys found value in this video. If you did, please like and subscribe to the channel. I would really appreciate it. And if you enjoyed this video, then you will definitely enjoy this video right here.